This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo coming to you from Kenya's capital, Nairobi. Let's start with a quick look at the markets. Now, stocks in developing economies ended the week lower as investors avoided risky assets today. Many of them are still fearful about the global economic impact of the coronavirus outbreak after China reported a spike in new cases. Now, South Africa's JSE slumped 8% along with global markets as data showed that the coronavirus is having a severe effect on China's consumer spending. Investors are also waiting for the outcome of the budget speech, which is expected next week. Pretty stagnant a day across other major African markets today. Now, also coming up on the show. Coronavirus set to cost airlines nearly $30 billion. Nigeria rolls out plans to fix its long-standing power supply problems. And China's tech giant Huawei invests $20 million in 5G applications. Now, the International Air Transport Association has warned that the coronavirus outbreak threatens to erase about $29 billion of this year's revenue for global airlines. Most of the brunt will be borne by Chinese carriers as travel crashes worldwide. Now, the trade group for global airlines says that the virus causing COVID-19 has the potential for causing a 13% decline in demand for Asian carriers this year. Global air traffic will be reduced by 4.7% for the year, marking the first overall decline in such a demand since the financial crisis of 2008 and 2009. However, it is still unclear how profits will be affected. International airlines, including British Airways, Germany's Lufthansa, Australia's Qantas, and the three largest U.S. airlines have suspended flights to China, in some cases until late April or May. Now, as the impact of COVID-19 intensifies across China, global supply and production lines are starting to feel the knock-on effects. Apple and Jaguar Land Rover are just two high-profile international brands who are issuing warnings about shortages of parts, affecting their ability to deliver their products. Now, Andrew Wilson takes a look at the vulnerability of the global supply chain.
Volex is a UK company with 4 production plants in China. It's a classic parts supplier, cable assemblies and screens for applications including high-speed data, medical machinery and electric vehicles. The China operation has started up again after a 2-week delay, but so far with reduced capacity and fewer than its usual 3,000 local staff.
So in the plants, we're taking the temperatures of our employees when they turn up for work and during the course of the day and monitoring their health. We're also making people wear masks, which they're having to change regularly. And in addition to that, we're making sure that we're disinfecting common areas.
Supply chains today are extremely vulnerable to disruption, and China is the heart of specialist materials and production. Any procurement manager will have contingency plans for a particular client or plant shutting down, an alternative operation somewhere else, for example. But an entire country shutting down, well, even a few months ago, that would have seemed a bit too far-fetched. Not anymore. COVID-19 is climbing the business agenda. Jaguar Land Rover is reporting a shortage of parts at its UK operations. The car manufacturer joins a growing list that includes HSBC, Adidas and Puma, all reporting problems. In the US, Apple has warned that the global supply of iPhones has been hit by reduced demand and production in China because of the virus.
So the way a lot of our customers work is they are producing a complex machine, so perhaps it's a medical product, it might be a scanner, a diagnostic machine, and they're pulling together thousands of components. They need all of those components to be available in the same place at the same time. And if one of those components is not available, that has a significant impact on their ability to complete that particular production cycle.
In a modern world of just-in-time supply chains, the global community is about to figure out just how many eggs it has in one production basket. Andrew Wilson, CGTN, Basingstoke.
Now, as China resumes its near-normal economic production following the COVID-19 outbreak, African nations are hoping the impact of the disruption will be minimal. Well, CGTN's Angelo Coppola spoke to a South African business analyst about the turnaround prospects for China and its African trading partners. Let's listen in.
So tell me about the impact of the outbreak on the Chinese economy.
From I hear anecdotally from a lot of our clients in this part of the world, supply chains being disrupted, companies who are obviously importing from China. And secondly, what I'm more concerned about longer term, particularly for longer term this year at least, is the export profile, export basket of commodities from Africa into China. China's economy almost, you could say, has been largely been shut for the last 2-3 months. This will have a very negative knock-on effect on GDP growth, I would argue, for the rest of this year.
So having said that, what's likely to happen? What are the Chinese government likely to do to get their economy back on track?
Well, of course, they'll seek to accelerate the movement back into factories, largely dependent on, I'm told, as of yesterday, 70% of migrant labour still has yet to return. But they'll see a fast track there, a pump primary economy, greater liquidity, reduced interest rates, trying to sort of create a more sort of, boosting consumer sentiment, trying to catch up for the rest of the year. It couldn't have come at a worse time for China.
We know what the government should be doing, but what would you suggest as an add-on to what they're currently doing?
The sense of crisis should not be there in terms of policy making, but I think the more, should we say, gentle pulling of levers in the economy compared to what took place 10 or 11, 12 years ago would help China sort of again look to again, it's not about quantitative headline growth. The 6% figure seemingly is the new sort of, before it was 8, then it was 7, now it's 6. But ultimately, Chinese qualitative growth, not quantitative. And the traditional focus, traditionally, has always been quantitative. Let's not get hung up on the growth figure itself. Rather look at the quality thereof.
We've touched on what the Chinese are doing about getting the economy restarted. What about African countries and their trade relations with China? What's going to happen there?
I've seen through a sort of an East Africa lens, we see coffee prices down. Last article I read was down by 1/3 in a space of a month and a half. So that's very negative for coffee exports. Think Uganda, think Rwanda, think Ethiopia, Kenya, the like into China. But it's really trying to figure out, well, this lack of purchasing and lack of demand of commodities, be it soft or hard commodities, from Africa, not just us, it's Latin America, it's Australia as well, of course, will have a very negative effect, and that's going to have a negative knock on African growth forecasts as well. I think many of us African states have yet to quite understand the impact. Hopefully, it's a short-term one, but nevertheless a negative one.
Well, shifting focus to another story out of South Africa, President Cyril Ramaphosa has reiterated that unless the majority of South Africans have access to land, inclusive economic growth will not be realized in the country. Ramaphosa said this during a speech to lawmakers in Parliament on Thursday, in what could be read as a response to the criticism of South Africa's land reform program by U.S. Secretary of State Mike Pompeo. Ramaphosa emphasized that there is no turning back on amending the Constitution to allow land expropriation without compensation. While CGTN's Yolisa Njamela has more on that.
Speaker of the National
Without mentioning the U.S. Secretary of State Michael Pompeo and other critics of South Africa's land reform process by name, President Cyril Ramaphosa did not mince his words. He made it clear that South Africa's constitution will be amended to allow for the expropriation of land without compensation to redress the past injustices.
Unless we change the patterns of land ownership in South Africa, unless we give all South Africans access to land for agriculture, for commerce, for housing, we will not only be perpetuating a grave injustice, but we will also be constraining the economic potential of our land and our people.
In his hour-long speech, the president also expressed concern about the trivialization of gender-based violence by MPs during Tuesday's disorderly session. At the heart of the clash on Tuesday was an allegation by ANC MP Boy Mamabolo that EFF leader Julius Malema had abused his wife, Mandwa. Malema dismissed the claims and later accused Ramaphosa of having physically abused his late former wife, Nomazizi Mchochisa.
The exchange we had served to politicize and in a way also to trivialize the national crisis of gender-based violence. I think this is something that we should apologize to South Africans for the manner in which this matter was debated.
The president went on to apologize to Malema and his wife. Malema has also since apologized. Moving on to other pertinent issues, the president condemned suggestions by South Africa's last apartheid leader, F.W. de Klerk, that apartheid was not a crime against humanity. In a recent interview with the public broadcaster, de Klerk said apartheid was not a grand-scale crime and cannot be compared to genocide.
Apartheid was inherently a crime against humanity. I would even go on to say that to deny this, in my view, is treasonous.
On other urgent matters affecting the country and the continent, the president emphasized that his government will utilize infrastructure development as one of the key tenets to help grow the economy. Ramaphosa will also extend this to the rest of the fellow Africans.
During the course of the chairship of the African Union, we will prioritize the development of infrastructure that is so vital to economic integration, the building of roads, rail lines, ports, telecommunications, networks that will link African markets to each other.
The president also pledged to ensure that the red tape in government operations is removed to ensure repositioning of the economy. All eyes now will be focused on the budget speech that will be delivered next week. This is where the financial allocations are expected to match what the president said during the State of the Nation address will be prioritized. Yulisa Njomela for CGTN in Cape Town, South Africa.
And in Zimbabwe, the country's central bank chief says it will take the country 5 years to completely de-dollarize. While the central bank maintains they are on track and the process is going well, many transactions, particularly in the informal sector, are still in US dollars. Well, CGTN's Farai Mwakutuya has those details.
When Zimbabwe banned foreign currencies to pave way for the reinstated local unit, businessman Kelvin Motsi was in limbo.
When I came to work, all my colleagues were asking, how should we trade today? Ever since in the morning up to now, we haven't closed the sale, 1. 2, we haven't made a full quotation because already we are fearful of sending a quote in US dollars. Already it's banned. But the jinx of the matter is we do not fully comprehend the idea of what they have announced.
8 months on, things are a bit clearer. He charges in Zimbabwe dollars, but links everything to the greenback.
Every day in the morning, I look up on internet, I look up on certain WhatsApp groups, know what's going on, what's trending, what's the rate, the interbank rate as well. That's the one I use. I also go to the parallel market, I just check how much are they selling at, so that I set my prices right according to that very day. Because it's these days it's hard to strategically plan for the next month.
That means daily price adjustments, an administrative nightmare which is necessary due to a lack of confidence in the Zimbabwe dollar, though authorities think otherwise. The central bank bases its claim on bank deposits as well as the value of transactions in local currency, which now outstrip those in US dollars. However, some say those statistics may not necessarily reflect the situation on the ground, especially in the informal sector, where US dollars are preferred and their use remains unaccounted.
When we begin to believe in our own currency and we want to hold our own currency and not other currencies, then you can declare that de-dollarization is happening.
For that to happen, the Zim dollar must meet certain criteria.
One, as you have said, people do not like it. People should like money. We need money. I love money. I like money. One, that's one. Two, it should have a sense of secureness. To secure your wealthy in a currency, it should be easy. There should be easy access. Not of only the liquid cash, but we also have to have free access to our monies in the banks every time when we need it.
The central bank plans to release higher denomination banknotes soon as one way to improve availability. Farangwa Kutuya, CGTN, Harare, Zimbabwe.
Now, Egypt's central bank has kept its key interest rates unchanged. It left its overnight deposit rate at 13.25%, with the overnight lending rate at 12.25%. Egypt's apex bank called a peak in inflation cited a peak in inflation as the basis for its decision. The country's annual urban consumer inflation rose to 7.2% in January from 7.1% in December. Now, back in October, it fell to its lowest in years to 3.1%. The most populous Arab nation is emerging from a 3-year IMF-backed economic reform program. It now has an inflation target of 9% in the last quarter of 2020. Well, now let's take a look at our corporate headlines today. South Africa's Anglo Gold Ashanti has reported a 72% jump in annual earnings, underpinned by higher gold prices and a solid performance from its Kibali operations in the DRC. Now, the gold miner's headline earnings per share rose to 91 cents in the year ending December 2019, compared with 53 cents a year earlier. That's in line with what the firm had flagged to the market. And Kenya's Absa Bank has signed almost 5 million customers on its virtual banking platform, which it sees as a major driver for future growth. When the bank first launched its virtual savings and loan app known as Timiza, Swahili for Achieve, in March 2018, it attracted 300,000 customers. By the end of the year, it had 3 million users, with lending standing at $98.9 million. And British American Tobacco Kenya has posted a drop in net profits from $40.5 million in 2018 to $38.5 million at the close of the financial year, which ends 31st December 2019. The cigarette manufacturing conglomerate blames the newly introduced excise tax on tobacco for the drop in sales and profitability. It said gross profit reduced despite the significant revenue growth and reduced financing costs. And lastly, De Beers has reported its worst set of earnings since miner Anglo American bought it back in 2012. This is as the diamond market struggles with weaker Chinese demand and a glut of stones. Now, underlying earnings for the world's second biggest miner of the precious stone fell about 87% last year to $47 million, as the average price for its diamonds dropped by a fifth, while of course revenue declined 24% to $4.6 billion. And that is a look at our corporate headlines. Well, let us head into a short break now, still to come. Nigeria rolls out plans to fix its long-standing power supply problems. And the UNDP eyes 2.4 billion gamers in its quest to tackle climate change.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global business, only on CGTN.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference.
Welcome back. Well, let's head to Nigeria now, where the federal government is reportedly considering a proposal to take over power supply from the distribution companies and hand it over to a German firm, Siemens. Now, should the proposal be approved, Siemens will fully take charge of power generation, transmission and distribution in the country. The Minister of Power, Saleh Maman, says whereas Nigeria currently generates about 13,000 megawatts of electricity, it still transmits 7,000 to the distribution companies, otherwise known as discos, but these companies can only distribute about 3,000 megawatts to end users. Now, this is despite the huge investments made into the sector by the federal government since the privatization of the power sector in 2013. Well, let's get the private sector perspective on this. We're joined by George Itomi. He's a director with the Echo Electricity Distribution Company in Nigeria. Great to have you on the show with us, Mr. Itomi. First and foremost, let's start with the fact that it's been almost a decade since we saw this privatization effort in Nigeria's power sector. Why have private sector investors like your company struggled and suddenly failed to improve power supply in Nigeria?
First of all, thank you for having me. A decade is a bit of an exaggeration. It's actually about 6 years since privatization, and the reason the privatization has not manifested in the benefits that were expected are very simple. At the point of privatization, there were commitments on the part of the government through the BP, and 4 of these commitments were: 1, to allow for cost-reflective tariffs; 2, to ensure that the ministries, departments, and agencies of government pay up monies they owe to the sector; 3, there was to be a provision of 100 billion in subsidies for the most vulnerable consumers; and 4, they were supposed to be at least 5,000 megawatts of power. I heard your report say that 7,000 megawatts is transmitted. That does not tally with the figures you will find on the NEC website. There was only once there was an attempt to evacuate 5,000 megawatts, and the grid collapsed because it was too strenuous for it. And from that time till now, the average power that has been transmitted to distribution companies has been anything between 3,000 and 4,000 megawatts. It's good to have our figures very accurately. But the biggest constraint is the mismatch between the cost of the product and what we are by regulation allowed to sell it for. If a product costs $5 and by regulation you can only sell it for $3, then there is a vacuum of $2 which needs to be catered for. Now, since the government, for whatever reason, they don't want to, and I don't blame them for it, maybe because power has been provided in the past as a social service, feel that it's going to be too much of a shock to consumers to have that sort of increase. They have to find a way of mitigating against the loss and then to attract investment. No businessman invests into a clearly loss-making business. And had all of these 4 points I mentioned not been agreed to, I would have assured you that there would have not been a single investor in this sector. Now, it's a little bit of a go-around to say you will not allow for cost-reflective tariffs because it costs phenomenally higher for the average Nigerian to self-generate. The Nigerian has had to deal with generators, with various types of fuels, petrol, diesel, solar, inverters. There are so many different ways Nigerians have to self-generate. And if you look at the sum total of what it costs them to give them self-supply, it's far higher than if you had allowed for cost-reflective tariffs, which will achieve two major things. One, encourage investments, and two, lead to a steady growth of supply, because you cannot give everybody power at the same time. Don't forget, electricity holds the key to the diversification of our economy, and we must give it the right priority. The model we followed when we were doing our privatization was the Delhi model. And if you go to Delhi, they will tell you that the government stood by and subsidized the most vulnerable of consumers over a period of 10 years. We're barely 5 years, 6 years into our electricity, and there is complaint about subsidy.
Right.
Now, the value chain works like this. Most power we get comes from the thermal plants. The thermal plants, the feedstock is gas. Gas itself is subsidized. The international price for gas is anything between $7 and $9. Unfortunately, in Nigeria, it's pegged at $3.80. So the first point of dislocation is that the gas producers are owed a lot of money. And from time to time, they refuse to supply gas.
Right.
And once you don't supply gas, the generating companies cannot generate electricity.
Sorry to interrupt
Under
you
that
there,
crisis
Mr.
atmosphere, the government then scampers around.
Sorry to interrupt you there, Mr. Tommy,
Sure.
but you're getting, of course,
Go
into
ahead.
what could be the possible solutions going forward. Now, of course, they're talking about a review of the privatization effort. I'd like to get your take on what you think this could achieve going forward, and what could be a path to finding resolution. Is it time? Are you referring to time?
Yes. Now, I like the question you asked, because we should be talking about possible solutions, because 5 years, 6 years is enough time to take stock of what has happened and how the privatization can be reviewed such that it can get the teeth. Today, we know the problem of the sector is liquidity. There is no liquidity. Once a product, as I tell you, is selling below cost, it means instantly there is a liquidity crisis. So how do you fix that crisis? You must allow for cost-reflective tariffs. And cost-reflective tariffs will attract investments. Investments will attract competition. Competition will take care of the price itself. And I accept that there are bands of Nigerians who cannot afford cost-reflective tariffs. You can always ring-fence those ones and then provide for subsidies, which was the original intention. Today, in the district that I am director of, a co-district, we actually have consumer groups that are approaching us to ring-fence them, give them power, and then they will pay cost-reflective tariffs. So the way forward, therefore, is to have this group of willing buyers, as I can call them, whom we can then specifically invest in. They will pay, and then we can use whatever they pay to cross-subsidize those who cannot afford it. That is realistically the way forward. It's going to be incremental. Not everybody will get power. But don't forget that technology is going to have a disruptive effect even on the power sector. With solar, with renewables, with mini grids, you're going to have that Nigerians in far-flung areas who do not today enjoy grid power will be able to get power through solar and through so many other means. Right. So not everybody needs to be on the grid. This is part of the problem we have. The transmission company is struggling to give everybody power, because power was, as I said, was initially given as a social service. But now it's been privatized. The motive is to make profit, and you can only make profit when you sell the product.
Right.
It's preposterous to expect that people will invest in a business and not want it to work. So we are as anxious as the consumers to make sure that electricity works for everybody. So there is a clear path forward. I do not advocate for a reversal of the privatization, and I don't even believe the story that Siemens are not known to be electricity companies. They are service product providers. They can give advice. They're already working with the distribution companies and the transmission companies to look at areas where networks can be strengthened. We're working that out because it's not as easy to say you are sort of shifting people who are investing in your country. It will be a deterrent to the investors with the deep pockets, which we can attract if we simply remove the distortions in the market.
Well, Mr. Tommy, I have 20 other questions to ask you, but unfortunately, we have run out of time. But many thanks for your insight into this particular topic. That, of course, was George Tommy. He's a director with the Echo Electricity Distribution Company in Nigeria. Well, let's move on now to Ghana, where President Nana Addo has delivered his last State of the Nation address ahead of the general elections in December. He is promising a better economy if he stays in power for the next 4 years. The president attributes the boost in Ghana's economy over the last 3 years to financial reforms. Well, CGTN's Nabil Ahmed Rufai reports from Accra.
The moment a president tries to convince his country to keep him in power, the president says his government has spent $3 billion to reform the banking and financial sector in order to improve the economy.
Our economic growth has rebounded to place Ghana among the fastest growing economies in the world for 3 years in a row at an annual average of 7% GDP growth, up from 3.4% in 2016, the lowest in nearly 3 decades. The international investor community has recognized this development, resulting in Ghana today being the largest recipient of foreign direct investment in West Africa.
The president also says he's working to resolve Nigeria's land border closure, which has hit many businesses in Ghana. Nigeria closed its border to Benin last year in a bid to crack down on smuggling.
We're playing a positive role in the efforts being made within ECOWAS to bring this boundary impasse to an end, which will hopefully be sooner than later.
Meanwhile, opposition lawmakers refused to be part of the State of the Nation address. They walked out of Parliament before the president started his presentation in protest against his style of leadership. They accused him of stifling media freedom by shutting down some television and radio stations linked to the opposition party.
We consider President Nana Addo Dankwaa an eminent threat to the sustenance of the democracy in some of his actions. Since becoming president, Nana Addo Dankwaa has conducted affairs of state with some kind of tyranny and authoritarianism.
Parliament is expected to debate the president's address next week.
With just about 10 months to the general elections, President Akufo-Addo has a huge task of improving the economy further and making life better for citizens. This is something many Ghanaians will be considering while making a decision whether or not to retain him in power for the next 4 years. Nabil Ahmed Rufai, CGTN, Accra, Ghana.
Now, the UN's development program has come up with a new game to collect public opinion on climate change. The game is just one of several efforts the UN is undertaking to limit environmental destruction. There are over 2.4 billion gamers across the world, and the UN is hoping to tap into this market with its internet-based educational game. Here's CGTN Sumitra Naidu with more.
It's called Mission 1.5. A game that will aggregate data from all around the world. Those playing will be basically offering their opinions and solutions to climate change.
But the best part of the Mission 1.5 game is that it doesn't require registration. It takes 5 minutes to play, it's lots of fun, anybody can play it. The game presents itself as a series of picture-based questions, and one just clicks away. Choices that one wishes to make regarding issues relating to public transport, renewable energy, waste management and water use, and a multitude of other areas.
The data from the game will be collected and revealed at COP25 in November. The Environmental Summit will be held in Scotland this year.
We have to listen to the views of ordinary people, particularly our young people. Bright talent with good, rich ideas who will be the inheritors of climate disasters that this generation has created.
The game also comes with a survey, which is really the most important part of this data collection. The information is used to promote dialogue, principally with young people, in order to bridge this communication gap between policymakers, politicians, and ordinary people.
The game results will also be used to formulate collective action, practical day-to-day things that our governments can do to help the people of our countries.
I think it's very informative. I mean, when you think about global warming and pollution, you always think that there has to be a big solution that has to happen, but then something small as you changing your mode of transportation. Like, I didn't know that transports actually contribute to 23% of the emissions. That's actually like a fifth of the emissions.
I think this new initiative is awesome because it is interactive and everybody can use it, including the kids. So it's also very interesting. So it raises people's awareness about climate change.
By the help of the local people and everyone around, definitely they'll achieve what they want to achieve.
Mission 1.5 aims to reach 10 million people globally. Sumitra Nadu, CGTN, Johannesburg, South Africa.
Well, let's head into a short break now, but still coming up on the show. China's tech giant Huawei invests $20 million in 5G applications. And Brazil moves a notch higher in tapping into the solar power business.
Business in Africa is at the crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
Economic data out of the country. The country's foreign currency reserves.
With a dedicated and diverse team of anchors, CGTN now brings Africa to the palm of your hand.
I'm Penina Karibe in the heart of Nairobi, which is bustling.
From everyday heroes to the continent's most powerful figures, we bring their voices to you.
We haven't changed.
And this is something most of us are very excited about.
We bring you news that's changing perspectives.
I'm Uche Okoronkwo reporting from Nairobi's city center.
News that brings Africa to the world. CGTN. See the difference.
And here's a quick recap of today's top headlines. Oil-rich South Sudan's former rebel leader and its president will form a unity government by Saturday's deadline, quashing fears that the deadline will be pushed back again. South Sudan plunged into a civil war in 2013 when President Salva Kiir sacked his then deputy, Riek Machar. A November 12th deadline to form a unity government was pushed back, prompting the United States to impose sanctions on some political leaders. And Uganda and Rwanda are yet to find a solution to long-standing diplomatic tensions. 4 presidents from Rwanda, Uganda, Angola, and the Democratic Republic of Congo held a meeting at the Katuna border, but failed to reach an agreement on Friday to open the border and also ease those tensions. And the International Air Transport Association has warned that the coronavirus outbreak threatens to erase about $29 billion of this year's revenue for global airlines. And most of the brunt will be borne by Chinese carriers as travel crashes worldwide. International airlines, including British Airways, Germany's Lufthansa, Australia's Qantas, and the 3 largest U.S. airlines have suspended flights to China, in some cases until late April or May. And that's a recap of today's top headlines. Now, China telecom giant Huawei said on Thursday that the coronavirus outbreak won't affect the supply of 5G telecom equipment to its customers. Huawei said that its 5G equipment is manufactured in its own factories, and they've resumed production since the extended Chinese New Year holiday. The telecom equipment manufacturer said that so far it has been awarded 91 5G contracts. It also said that it has shipped over 600,000 5G antenna units to customers. Meanwhile, Huawei said that it plans to invest $20 million in innovative 5G applications over the next 5 years through the 5G Partner Innovation Program. And staying with the Chinese tech giant Huawei, the firm's chief technology officer, Paul Scanlon, said that the company will continue to focus on customers' demands. Let's listen in.
Life isn't easy, right? Business isn't easy. And if you become a market leader, then probably somebody's going to try and pull you down. That's probably the greatest thing probably is the fact that the US is recognizing that Huawei really is a great company, quite frankly. That they are seeing that this is a company that does things in a different way and is achieving certain types of results. Perhaps not the results that the US might like, but that's something to the side. But in terms of Huawei's investment and what we're going to do, if you trust us, we'll continue to invest. And I think that's what the UK government has demonstrated. I don't know what the UK and the US governments are talking about, but what we can tell you is we focus on customer results.
Well, let's switch gears now to Mexico, where Chinese auto firms are expanding their presence in North America by setting up joint ventures in the state. Here's Alistair Baverstock with a story.
Mexico's auto industry is one of the country's primary economic sectors, producing more than 4 million finished vehicles every year, more than 80% of which are exported to international markets.
Mexico attracted more than $32 billion in foreign direct investment in the country's automotive manufacturing industry between 2014 and 2018. According to Mexico's ambassador to China, 2020 is likely to see more from East Asia as Chinese auto firms increase their presence in the country.
That ambassador, José Luis Bernal, recently stated that 3 Chinese automakers, Chang'an, BYD and JAC, are taking concrete steps to either begin or increase production in Mexico. JAC, indeed, has been producing cars here since 2017, specifically for the Mexican market. Elias Masri, the CEO of Giant Motors, which manufactures the Chinese brand vehicles in Mexico, says the joint Chinese-Mexican business venture has been a success.
In
the past 2 years, our growth has been pleasantly surprising, thanks to the acceptance of the Mexican consumer to our brand. And last year, JAC was the fastest growing car brand in Mexico, even if from a smaller base, with growth which was more than 63%.
JAC is a special case, given that Giant Motors, which manufactures the cars, is a Mexican company holding the license to produce and sell the Chinese-designed vehicles and splitting the profits. It's a unique model for foreign investment, which industry analyst Samuel Ortiz has carefully studied.
This sort of shared investment is fundamental and shows how China is able to contribute to the advancement of technology here in Mexico. And it's important to mention that this is the only case of international and national investment working alongside each other. That shows us that Chinese investment differs from the traditional model.
And with the new US-Mexico-Canada trade deal expected to take effect in the coming months, some see the potential for even greater Chinese investment in the sector as a whole.
There's a new window of opportunity for China to see Mexico as an investment opportunity, for Chinese to invest alongside and into Mexican companies, so that they can export cars from the country that fit the new rules set by the new North American Free Trade Deal.
As Mexico seeks to attract investment in its auto industry, it may be the Chinese model of joint cooperation with established national firms that the country will want to encourage. Alistair Baverstock, CGTN, Mexico City.
And staying in South America, Chinese companies operating at all levels of the solar sector have identified Brazil as a key market for overseas expansion. Now, despite the anti-environmental stance of President Bolsonaro, a range of Brazilian state organizations and regulators have swung their support behind the renewable energy boom. And it looks set to revolutionize power production in South America's biggest country. Here's CGTN's Terry Wangari with more.
This solar farm, about 150 kilometers from Sao Paulo, produces electricity for around 40 homes and small businesses, from restaurants to gyms. Such distributed generations, better known as DG, have been multiplying in Brazil in recent years. Investors have been banking on the country's long hours of strong sunlight.
This plant generates energy for the distributed generation system. Our cooperative receives the plant's solar energy credits, CPFL does the measurements, and my customers get a monthly percentage of the energy generated by the power plant. That credit comes in the electricity bill, with the discount in the client's account.
Corporate and private investors have also been boosting solar panel production in one of Brazil's few domestic manufacturing industries. Now working round the clock to meet demand is the Brazil unit of Chinese solar modules maker BYD. The firm opened its first factory in Brazil in 2015 and hopes to increase its market share from 20% last year to 35% this year. As well as selling its solar panels, BYD is developing its own generation projects, including the Aracatuba solar plant in Sao Paulo, to supply commercial customers. Until 2018, the firm only sold its solar modules to big projects.
We have almost 20 hours a day of production to meet the pipeline of orders. We're in February and maxed out with orders until April. There is huge demand and growth in solar photovoltaic, fueled by the Brazilian government's decision to not cut distributed generation.
BYD is not the only firm to identify opportunities in the Brazilian solar power sector. Canadian Solar has a plant in Brazil to assemble the modules with imported parts. Many Chinese companies such as Risen, Trina, Jinko and Yingli are also supplying the market. ABGD, which is a local DG group, estimates that 17,000 companies are working in Brazil with projects including equipment makers, distributors and installers. Terry Wangari, CGTN.
Well, let's shift focus now and check in on commodity prices today. Oil prices falling again, with Brent crude dropping almost 2%, and that's as new coronavirus cases and weak Asian economic data continues to fuel uncertainty about the economic outlook. Also, major crude producers seem to be in no rush to cut output going forward. Now, this is despite better than expected U.S. oil inventory data, which came out this week. On the other hand, gold prices soaring today, hitting their highest in 7 years. The virus uncertainty is fueling demand for safe haven assets, of course, such as gold. Well, let's take a short break now. Still to come. Lobster catchers in South Africa suffer losses after China import controls.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
Now, South Africa sells more than 90% of its lobster catch to China, but exports came to a halt after the coronavirus outbreak hit demand in that sector. Now, the effect on fishermen who depend on sealing lobsters to make ends meet has been devastating. CGTN's Terry Wangari has this story.
The lobster catchers of South Africa's Western Cape have become an unexpected casualty of the coronavirus. This is after China halted imports of the West Coast rock lobster last month as part of measures to contain the outbreak.
The disruption now because of the coronavirus has added to our problem because we are stuck now. We sit with a resource, but we cannot export, we cannot convert it to money. Government usually in other countries would step in, they would intervene, they would come in and say this is an emergency here, let us do this.
First detected in China, the coronavirus epidemic has killed more than 2,000 people and infected tens of thousands more. This has disrupted global aviation, shipping trade and tourism sectors. In South Africa, which is yet to record a single positive result, the local lobster industry has been hit hard by the loss of its major trading partner. Last year, it exported 95% of 1,084 tons of total allowable annual catch to China.
I'm stuck now because they're putting our catches aside now. The factory don't want to take our fish. There's no market for our fish.
Brown holds a permit allowing her a total catch of 203 kilograms per season, which in her case runs from the 15th of November to the 31st of March. The government has previously restricted the daily catch limits and number of fishing days for commercial and small-scale fishing sectors. This is in a bid to restore natural crayfish stocks threatened by poaching and overfishing. Before China halted seafood imports, Brown could expect to earn $22 per kilogram for live exported lobster. The price has since slid to a mere $8 per kilogram on the local market.
I think the way forward is the government to give us an extension and to let us catch weekends and that they can also help us to get the market to export our fish because locally want to give us 125 rand a kilo. The market is gave people that caught before the coronavirus, they gave people about 340 rand a kilo. Wow. Now that is a great amount that I'm going to be lost with.
The West Coast Rock Lobster Association, which represents offshore and nearshore rights holders, said the outbreak has had a serious impact with direct financial loss to rights holders estimated in excess of $17 million.
At the moment, the coronavirus has had a serious impact on the industry. Obviously, financially, the number we're looking at, if things stay the same, is in excess of 257 million. And that is a direct impact on right holders / quota holders. But then there's the secondary effect on the people working in the factories that are now going to be processing less lobster, the people catching it. They're going to be taking out less fish and they're on a commission basis. So our fishing communities are going to have less money in their communities.
The industry was in discussion with the government about possible interventions such as extending the fishing season should China's trade restrictions persist. Terry Wangari, CGTN.
Well, let's head to Tunisia. The country is hosting the International Smart Industries Exhibition. The theme of this year's event is Industry 4.0 in Tunisia, a transition underway. Now, the event is organized by the Agency for the Promotion of Industry and Innovation in conjunction with the Ministry of Industry, Small and Medium Enterprises, Communication Technologies and Digital Economy.
This technological event aims to disseminate the concept of intelligent industry, Industry 4.0, and to encourage industrial companies and economic operators in general to take advantage of the opportunities offered by this new industrial revolution.
Innovation is the main difference between leaders and followers. That's how we can ensure the perennity of our economy. It is through smart industries and scientific research.
The event has hosted several workshops in new technologies for 500 managers. In addition, the Agency for the Promotion of Industry and Innovation is providing support to 100 companies in their transition to Industry 4.0 through the creation of 2 national centers for skills.
Each company used to be isolated from the other companies. This international event brings together startups from different fields to exchange information, skills, and to collaborate on new 4.0 projects.
Integration Objects is a world-leading solutions provider for process automation, command and control centers, operational intelligence, industrial Internet of Things, IIoT, cybersecurity, big data analytics for enterprises, process, power and utilities industries, defense and governmental institutions.
Our platform and programs are 100% Tunisian. Saudi Aramco is our main client. It is the largest oil production company in the world. We've installed the 4.0 and big data solutions in offshore drilling rigs to provide follow-up and maintenance.
A hackathon challenge was organized with the participation of 22 teams and 60 engineers. They have competed for 48 hours to find technological solutions to challenges facing enterprises in the field of Industry 4.0. The Ministry of Industry and Small and Medium-Sized Enterprises declared that the state has been working for years to establish a smart industry in order to improve the competitiveness of Tunisian enterprises. The minister added that over 90% of the country's exports are from manufacturing industries. Adnan Shawishi, CGTN, Tunis.
Well, before we head out, here's a quick look at Africa's currencies today. South Africa's rand reaching its lowest level in more than 4 months as, of course, the rising coronavirus death toll restrained global risk sentiment. Now, the rand has been the worst performing amongst emerging market currencies tracked by Bloomberg. Over the past month, it's been down by about 4.36% so far this year. The currency's performance has also been affected by concerns about South Africa's economic trajectory. That's ahead of the national budget speech expected next week. Meanwhile, Kenya's shilling easing slightly today. That's due to an uptick in end-month dollar demand from merchandise importers and, of course, the country's energy sector. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.